Well, good afternoon, everybody. It is Monday, June 20th. Happy belated Father's Day to all of you fathers out there. Happy birthday to a few of us in the last week, and happy Juneteenth, in recognition of June 19th. Let's get started this week with Mark's Monday Minutes, the minutes in Portland real estate. Now we'll get started, and then we're going to talk about affordability, about how much impact mortgage rates at a sustained 6% now for 1 week, and why real estate is not the reason the economy is slowing. You should know that, but let me just give you some data. All right, let's begin. So the week of June 20th, the number of active listings out there in the big real estate world around Portland, 3,283. That's about 220 more than last week, so about 7% more than the previous week. And we have been growing consistently now for about 9 weeks, total on my charts. New this week, 750 listings. Opposite that, 568 homes went pending. So more listings coming on the market in excess of those that are going under contract with buyers. And of course, the number of sold just about equal to that number of pending. So about 557 sold in the last week, 568. So comparable numbers, but 750, almost 180 homes more coming on the market, which is wonderful news for buyers. Now, price adjustments, this is the new number that I've been watching over the last several weeks. I'm going to make a point to include as one of these regular metrics. Price adjustments, 381 of those 3,283 homes. That gives us 11.6% of homes on the market that have had a price adjustment, because they never go up. Well, actually about 2.6% do. All the others go down in price. So a price adjustment is really price reduction. But why is that important? I'm going to get to that as a national trend here. Coming soon, no showings. We're at 64 homes out there on the market, of homes coming on the market in the next 21 days. If you would like to know about these, if you'd like to hear about them firsthand, I can get them to you. Yeah, I can do that. You just have to send me a message, send me an email, send me a text, respond to the video. I can get those to you. We'll work out the details. All right, the number of homes sold in the last month, in the last 30 days, 2,513. Now, what does this do? This helps us set up that amount of inventory. If the clearance rate, that how many homes would sell, how long it would take us to sell the current existing inventory of homes. Well, right now we hit 1.3 months. So just about 5.5 weeks, almost 6 weeks is what it would take to sell off all the existing number of homes if no new homes came on the market. Now that's in the next 30 days. This is good. This is an increasing trend. It is our 6th week in a row where we have over 1 month of inventory. This is good because the last time it happened was way back in 21 at the beginning. So it's nice to see a little more variety for buyers coming out. Now, let's focus on those 4-car garages, the ones that all those garage enthusiasts looks at. Okay, 88 current homes on the market with a 4-car garage or larger. Now, of these 88, 19 are below $1 million. All the others are over $1 million. So that tells you about where the distinction is in these. Of those 19, I would say 16 of them are viable homes to buy. It looks 2 of them appear to be a commercial building that has a residence but also has a large warehouse, and one of them absolutely is just a scrape, a tear down, just land being sold. I'm not sure why they give it number of parking spaces, but it's on there. That makes for 18 new homes in the last week with a 4-car garage or larger. 7 have gone pending during that time, and 11 have sold, all in the last week. That gives us a sold in the last 30 days of 37 homes. So if we sell 37 homes with a 4-car garage in the last 30 days, and we have 88 homes on the market, we have potentially 2.4 months of inventory for homes with a 4-car garage or larger, excuse me. All right, once again, the reminder, monthly newsletter, sign up, send me a text message. I'll sign you up for that monthly newsletter. You'll get those information, those homes that are coming soon, not available for public showing, but I can get them to you. Sign up for the newsletter. Now, let me explain why, even with increasing mortgage rates, because they hit 6%, even with those mortgage rates, we are still so solidly in the driving lane of a seller's market. It all has to do with supply and demand. Now, right now on a nationwide level, I said in Portland, we have 3,283 homes, so almost 3,300 homes for sale in the greater Portland metro area. On the national stage, we have just under 400 100,000 homes for sale. Now, to give perspective, that's 16% higher than last year at this time. However, 3 years ago, in 2019, we had 1 million homes for sale at the same time. So in just 3 years, we now only have 40% of the available inventory available for sale. Think about back to toilet at the beginning of the pandemic, toilet paper. If there's only 40% of those available homes that were sale at that last point, it is absolutely a matter of supply and demand. Buyers still want to buy, sellers are reluctant to sell, so it is still a good time to buy and sell. Now, that said, I look at reasons what could give us an increase in inventory. What could create a little bit of a spike or a big spike? Well, we're seeing this in some of the other states. In fact, in Texas, Florida, and Arizona, we're seeing an increase in the number of new homes. This is because new construction is finally coming online after supply chain delays last year of lumber and COVID-related slowdowns in permits and approvals. They're finally seeing new construction come on the market in those markets. However, that's not Oregon. Oregon is still well behind the curve in the number of new construction permits. And in fact, an overwhelming number of those new construction permits are for multifamily. So we're looking at more apartment buildings. That's what's being built. Unfortunately, that's great for those investors, not so good for you as a buyer or as a seller, because it just doesn't increase our inventory. Now, it is good, sort of like our metro border that keeps buildable land inside the Portland area and elevates property values. That's not going to change. Right now, it's inventory. Now, as we look forward as to how this might affect, if we're just not having the increase in inventory, we have been blessed with the last year 12% appreciation. So your home that you bought a year ago, approximately 12% greater value, additional equity. Going forward, the best minds that I listen to, they're saying that we might see maybe 2% appreciation in the next 2 months. So you're going to flatline, which, as far as right there, right flat, right across my nose. So, which as an investment may not be what you're looking for, but have you looked at your stock portfolio? The Dow Jones is down 31% this year. So if you could stabilize your money at 2% or lose 30%, where would you rather have your investment? I'd rather have my investment, my roof over my head. Now, again, real estate will not be the reason the economy is slowing down. It will be subject to it because inventory is still low and it is unlikely to increase in any dramatic fashion, at least especially here in the Portland area, anytime soon. Second difference from 2007, 2008 that we all think about and all the media wants to remind us about, mortgages are still available. Yes, they're available at a higher rate. They're no longer 3% or 4% or 5%. They've now been 6% for the last week, since last Monday. But they are available. There are reasonable, rational lending guidelines that are keeping those mortgages well within the conforming box, making solid loans to viable buyers by reputable banks who will hold the mortgage notes long term. That is the entire opposite of the spectrum of back in 2006, 2007, and resulting in 2008. So we have low inventory and abundance availability of mortgages versus 2007, where we had a spike, a flood of inventory, flooding the market with homes available, restrictions on mortgages so buyers could not qualify, and that's why prices went down in the toilet. So now this time we should see them flatline, and then we'll see how they go from there. But that's why we're not going to see a reduction in real estate because of real estate. Now, as far as the other big factors out there in the economy, that little inflation factor, well, we're just going to have to see. If you have any questions, if you're interested in those coming soon, no showing listings, or you have any other inquiries, reach out to me, Mark Scholes, Portland Homes for Cars. That's why I do this every week, to answer questions, perhaps prompt you with ideas, and then ask me. I'm your consultant. I'm the one to help you to answer your questions. Have a wonderful week. We'll see you next week.